Want to know a way to get a lot more for your business when you're ready to sell it? Hi, Dave Wilkins, Wolverine Business Solutions, your partner working with you to achieve your goals by building sustained business value. If you're trying to figure out what your business might be worth, it's helpful to know what savvy buyers are paying for businesses like yours these days. A little internet research will probably reveal that a business like yours trades for a multiple, such as 2, 3, or maybe 5 times your pre-tax profit, which is known as seller's discretionary earnings, SDE, for small businesses, and earnings before interest, taxes, depreciation, and amortization, or EBITDA, for larger businesses. Be careful that you don't obsess over the multiple. This multiple can transfix entrepreneurs as they want to know their multiple and how they can jack it up. After all, if your business has $500,000 in profit and it trades for 4 times profit, it's worth $2 million. If the same business trades for 8 times profit, it's worth $4 million. Obviously, your multiple will have a substantial impact on how much you make from the sale of your business, but there's another number you need to pay attention to as well. The number your multiple is multiplying, and that number is profitability, which we all know is open to interpretation. Most entrepreneurs think of profit as an objective measure, but profit is far from objective, as we've talked about in previous videos. When it comes to the sale of your business, your profit will go through a set of adjustments to estimate how profitable your business will be under a new owner. This process of adjusting and how to defend these adjustments to a buyer is where you can dramatically boost your company's value. Let's take a simple example to illustrate. Imagine you run a company with $3 million in revenue and you pay yourself a salary of $200,000 a year. Now let's assume that you could get a competent manager to run your business as a division of the buyer for $100,000 a year. You could safely make the case that the buyer, under the new ownership, that their business would generate an extra $100,000 in profit. If they are paying you 5 times profit for your business, that one adjustment alone has the potential to earn you an extra $500,000. Another good example would be adjusting for all the unnecessary spending that you may be doing to reduce your profit just to cut taxes. Admit it, we're all guilty of this one at one time or another. By adding back those expenses to calculate the adjusted SDE or EBITDA and providing the justification, which in this case is discretionary spending to save taxes, adding, say, the $20,000 you just spent to save on taxes back to the adjusted profit would add $100,000 to your business value using a 5 times multiple. You should be able to make a case for several adjustments that will boost your profit and increase the value of your business. This process is more an art than a science, and you need to be prepared to defend your case for each adjustment. It's important that you make a good case for how profitable your business will be in the hands of a new buyer. Some of the most common adjustments relate to rent, where you personally own the building your company operates from, and your company is paying you a higher than market value in the rent. There's others as well, such as startup costs, one-time lawsuits or insurance claims, and one-time professional service fees. Your multiple is important, but the subjective art of adjusting your SDE or EBITDA is where a lot of extra money can be made when selling your business. To learn more about how Wolverine Business Solutions partners with our clients to build business value and get maximum amount when you're ready to sell, please reach out to us using the link below. If you have any ideas for other content or questions on how to boost financial performance, accelerate growth, and most of all, build sustained value, please let us know in a message below as well, and be sure to join our Facebook group and our YouTube channel using the links below. Thanks.